Yo, what up everyone? In this video, I want to go over a couple of trades that I took. I want to break down why I took it, my stop loss, my entry, and the overall thesis for the trade. I'm also going to get into a couple of setups that we took this week on my Discord community. There were some nice setups that we could learn some good things and we could learn some bad things to improve for future trades. If you're new here, be sure to subscribe to the channel. And also, if you want a very good trading resource, I'm going to link my Instagram in the description below at Ameritrade. This is my only account. I post daily trading recaps on here, along with very good trading tips and tricks that I guarantee you're not going to find anywhere else. Link is in the description below. You're missing out if you're not following it. But now let's get right into the recap. First thing I want to get into is NASDAQ on Wednesday, November 3rd. To get more context, let's go over the pre-market plan. I post these every single day for Trade course members of the levels I'm looking out for, potential supply demand zones, chart patterns, and just potential setups. So the first one was on NASDAQ. I said yellow flag conditions. We had the FOMC meeting at 2 p.m. Eastern. We were at all-time highs, so there wasn't any supply. I can't stress for those to trade differently when we're at all-time highs because we're not going to have any supply and you need to adjust to the current conditions. We also had demand, a questionable zone at 15937. And a few other imbalances lower at 8.2 and then 1.9. So what I mean about yellow flag conditions is, if I pull this up here, is I said I'm sitting sidelined, yellow flag conditions, until something presents an opportunity. It's like you're driving down the road, you see the light go to yellow, you have the option. Do you want to go through it? It's risky. Or do you want to stop before it gets red and be a little safer? Same thing with the market. Yellow flag is I'm ready to strike. Just something needs to present itself in a high quality manner. I said I see nothing of quality right now. Why trade something that doesn't, or why trade something that looks mediocre? That could have changed in the first 5 minutes, 10 minutes of the market open, right? As the market's constantly throwing different things at us. I said quality over quantity. You get paid for your opportunity, not your time. If there is no opportunity, then there's no trade. I'm a firm believer in taking, let's just say, one quality trade over 10 low quality, shitty trades. It's all about the quality versus the quantity of trades that you put on. Once you can accept that, a lot changes in your own trading and in your daily emotions and your daily dialogue that you constantly are telling yourself. You don't feel like you always have to have a trade on. You can be more patient, more selective, and really just wait for your time to strike. You stop forcing shitty trades that are destroying your account, and those are ones that destroy your emotions and affect your future trades. So now let's get into this NASDAQ trade. It was very simple analysis. Like I always say, there's nothing difficult in trading. We make it hard on ourselves. So I said it's not a good open for NQ. This is in the intraday commentary tab, just where I update my thought process as the market's developing, just of what I'm looking at and what I see. It's a very bearish, showing responsiveness by sellers at the highs. Now those sellers need to keep putting pressure down. We need to stay below 15980, and bears got it. I said I'm watching this 15980 area to act as resistance if we are below and support if we are above. Now, where I got this 15980 area was an area that I found some sellers earlier on, and it was an area that acted as resistance. I said that at 9:43 when the market looked like this. So I wanted this to act as resistance, and I saw some sellers near the highs. We didn't have any supply, so you playing short is counter trend. You have to adjust and adapt to that. But I didn't play QQQ puts until 9:40 when the candle looked like this. So what I did here, I normally don't do this, but because I was playing counter trend, I wanted to put a little bit of a feeler out there, almost like throwing bait in the water and seeing if there's fish in the water. I threw a small starter size position at 940 before this 15980 acted as resistance. And then once we started to see some selling pressure, show you what it looked like this. 15980 is acting as resistance. Not resistance in a way where sellers have control because we weren't moving down just yet. We were consolidating. We were sideways. We need a break below 15957 now, and that's going to cause a further sell-off into the 3.7 demand zone. So as long as sellers put pressure on the bulls, we're going to move down. I put a little feeler position, threw some bait in the water just to test out the waters first. And as soon as I got that confirmation from sellers, it wasn't until 10:01 the market looked like this. Selling pressure coming into the market. I added my full position of QQQ puts for an average at 84 cents. Just off of that simple thesis, demand much lower. Then the next 3 minutes, moved right into this demand zone, and I scaled out 75% of my position at 97 cents. Now, not a crazy gain, but keep in mind the context, and keep in mind that I'm playing counter trend. When you trade 200 contracts, 150 contracts, 300 contracts on QQQ, right? A quick 20-cent move is making you good money in a matter of a 3-minute period. I don't know who wouldn't take that. And then I stopped out the remaining of my position at break even of the last 20%. So the trade was still green. It's all about trade management. It's all about risk management. This 3.7 was a very important demand zone because we bounced at it overnight and I was playing counter trend. Now keep in mind we have FOMC now. Market's very flat. We're consolidating all day basically until 2 o'clock. This is where your emotions are going to get the best of you. Yes, we bounced off of demand. Buyers are factored in. 2 o'clock hits. FOMC starts. Crazy rally after buyers get factored in. So that just goes to show you how the market plays its games. It messes with your emotions. Smart money, institutional money, big money need to get their positions filled. FOMC came out. Very crazy move up. Some members were sending me some option flow, and there were some crazy SPY calls and QQQ calls coming in right before FOMC when we bounced off of demand. So it goes to show you, you can get a very serious edge if you know where imbalances are and you know where big money puts their position, where they're buying, where they're selling, and different price and volume types of analysis. To illustrate another point about how price precedes news, let's look at this Netflix example. This was on Tuesday. The market was very flat. We were selling off. Volume was pretty dead. We come into this 674.50 demand zone. Boom, news comes out. Volume starts increasing. And we had a crazy rally, about 13 to 15 points from this demand zone. Now, this aggressive move also formed a new demand zone at 677.77. That on Wednesday, we opened up, sold off into it, double bottomed, and had a clean rally from that imbalance. Hugged VWAP and had a nice end of day rally. I did not take this play, although the analysis was correct and it provided a nice clean opportunity. I wish volume was a little higher, but it just goes to show you how we bounce off demand, price precedes news, create new demand. The next day we go test it and have a very clean rally with a very strong market given that FOMC Powell money printer. On Thursday, I took a trade on Airbnb. I normally don't trade this name. However, the setup looked very good. A member sent this to me. So we actually were watching this on Wednesday. It was in the pre-market plan to see if we could get above the 175, 176 area. Once that proved buyers were stronger than sellers at an existing supply imbalance, where sellers proved to be strong at one point at the origin. So we're watching a breakout above that. We also had this 171.39 demand, which made me like it. We bounced off it on Tuesday and again bounced off it on Wednesday. We never got that breakout on Wednesday. It happened on Thursday. I'm going to pull up the pre-market plan. I said I do like Airbnb. Very tight flag here, low volume. Now just need volume to explode, showing interest on a breakout. I like how we bounced that demand yesterday. Only obstacle for higher prices is supply. I said I'm watching to get long if we could build my gauge that I use to develop interest and participation in the market. Above 175, 176, slice through supply and act like it's not there. Volume will tell us the story. Okay, so a couple of things with the setup is we opened up above that 174 supply zone. So now technically I would want this to act as support. I would want buyers to defend pullbacks. We sold off, they held the 174 area, and then we started moving up. One thing I will say is, actually I'll go to a daily chart so you can see it better. We had this downtrend line right here. Downtrend, resistance, resistance, and then we wanted to break out with higher volume. As you can see, we got that. Only problem with Airbnb, we also were putting in higher lows, bounced off demand. So a lot of factors were lining up towards the bull side. The only problem is we had earnings after the bell, after the close. So premiums were going to act a little weird. And usually stocks tend to do something that I call playing games. Trade members know exactly what I'm talking about, prior to earnings, even sometimes after earnings. We never know what's going to happen, but we have to be open to different scenarios based on whatever the market presents, and we react accordingly. So we sold off, we acted as 174's resistance, and what I liked here was buying pressure was coming in. If you look at this indicator up here, the first 5 minutes of the market open had a 197 increase in volume compared to its daily average. First 15 minutes had a 219% increase compared to the first 15 minutes of the average. So we obviously were showing interest in the market. Now we just needed price and volume to kind of confirm it and give me a good entry signal where my risk to reward made sense. And going to a 1 minute chart, it wasn't until 10 o'clock where I entered Airbnb. I saw a nice candle come in. If you are watching price and volume develop in real time, you're going to see exactly what I saw at that point. Very hard to show it after the fact, which is why it's very, very important to develop this deep relationship with price, because volume started coming in, and at the close of this 10 o'clock candle, I got long Airbnb at $4.50. Now, my stop for this trade honestly was going to be below this 175.40 area, 175.20 area. So I was risking about $1.20. Not the best risk to reward. However, I was very confident that this was going to be a higher quality of a setup due to all the underlying confirmations and due to the underlying conditions, what presented to me on Airbnb. So I'm long here. Next candle, sudden volume coming in, all green buying pressure. We rally $1.40 on a 1 minute candle. Then the next candle, another strong push, higher volume. And I don't know what it is. I think it's more of a feeling and intuition, which is not good to trade with. But I really wasn't comfortable holding this Airbnb trade because it was playing such games like I mentioned earlier. So I just wanted to take my full profits off the table. And I didn't want to play games with this, especially with heavy volume. Now, this could have backfired and this thing could have rallied, another 5 points. And I could have been, complaining about selling too early. But if you see my last video, I prefer to play a little bit defensive, take profits off when I have them. And at 10:02, I got out at $5.40 for a 90-cent gain. So very quick move. It was a 2 minute position. And yeah, I could have squeezed a couple more points out of the market, but I'll never complain about the profits. I could have sold here and we could have dumped. I also could have sold here and we could have rallied. I'm not here to try to squeeze out every single penny that the market gives. One thing I do recognize is a lot of traders, it happens to me sometimes too, and it backfires. And sometimes I take losing positions because of it. You try to squeeze every little penny you get out of the market. You try to squeeze all the juice out the lemon, and sometimes it's sour and it backfires and you lose money because of it. So as long as you follow your plan, my risk to reward wasn't perfect on the setup. So it was kind of, although I won on it, it was something that I want to learn off of and go back and not try to really do it again. That volume was sudden. It was a sudden pump. And no reason to try to sit here, and contracts went to 550. I sold to 550, let's just say. No reason to try to sell at $7, right? Or $8. You may never get it. Take profits when you have them. Play defensive, because if you did have that or didn't have that mindset, you would have got dumped on, and most likely you would have stopped out, especially on a Thursday with that quick, little dump. And then towards the end of the day, we broke the high. Like I said earlier, we had earnings, sold back off into demand, and rallied. So now everything is going to get skewed with this earnings. I really don't like playing prior to earnings, and I really don't like playing after earnings unless there's some solid interest and some solid volume coming into the market. And I just want to shout out all the members of the community who message me things like this. It's a very good feeling to be a part of everyone's trading journey, and I'm a very important reason to see the improvements in their own trading. First day in the program, made a nice profit. Starting November very strong, 17 green days in a row, $2,000 to $4,000 challenge completed in 2 days. 8 out of 8 trades, best streak ever, most consistent, most profitable, very big milestone for him. What else do we got? Started this month with 7,000, aimed to hit 25K. He's already doubled more than his account to 18.7 thousand, which is insane. He has no words. This is the results of following a process, respecting your risk, entering when you should be entering, and taking quality setups. Some nice setup for Jeff. He's been killing it. Miles, $3,600 profit. That Airbnb trade, this member made $1,500. Blessed that he found this group. Trading for 4 years. Finally found consistency after joining the group. A lot more confidence. It's all about understanding the right things to the market, alleviating all of the noise that is detrimental to your trading, focusing on the right things, and just respecting your risk, taking quality, and just following the process. And this is awesome. He's showing his account balance. He started with 10,000 and he's arrived to 40,000 in just a month, 2 losing days. It's been the most profitable strategy he's ever learned. He has some experience, 4 years, but with supply demand, he skyrocketed. He thinks the course should be more expensive. So it's just amazing to see the feedback from different members. Trading's very shallow. It's very alone. So doing it with a community, and for someone like myself, getting this type of feedback is a very good feeling. I appreciate everybody. So I think I'm going to end it on that note. If you enjoyed this video, drop a like, comment any questions. Be sure to subscribe to the channel. And if you really want to learn more, check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord at no extra charge. But besides that, I'm ending it. Peace out.